Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Tuesday, August the 24th, 2010, and it's time to look at the markets. Okay, before we begin, I got an announcement to make. Last night, after I posted my market analysis, I got an email from YouTube. They have made us a partner on YouTube, which is very cool, and it's only made possible because of you guys. You guys have been sharing our videos online, referring your friends, watching our videos every night, everything. Thank you very much. You guys have actually helped us stay free, and that little bit of revenue that we make from the ads that they put on our video, that helps us stay free, and we appreciate that very much. Thank you. Let's keep working towards that objective with the whole site paying for itself because I'm tired of doing it, but it's all right. Let's look at the markets now. I just want to say thank you. Quick look at the Dow Jones Industrial Average. She was down 133 points on the day. No surprise there. We said short it. It makes sense. And some guys were looking at this saying, hey, she's under the 20 line. The slow stock's under the 29. She should bounce. She shouldn't be a sell. And that would be incorrect. There's lots of information I could give you here, but it would take up way too much time. So I'll save that little tidbit there for you in a minute. Main thing here to look at is this is not a hammer formation. Okay, that's a continuation to the downside. That's an inverted hammer telling you to sell. This is where you're finding this 200-day moving average. It's where you're finding the easy shorts. Anything at that level or higher. Boom, boom, boom. Easy shorting opportunity, okay? Now you're back below the 50-day moving average, okay? To say you're going to buy here, I know that some people were actually calling for a long trade here. That doesn't make any sense at all. Your upside is very limited. You have lots of resistance here, okay? Why would you make that trade? You wouldn't. It's not safe. You have plenty of room to the downside, though, when no resistance levels. You had a resistance here at 10,000. We told you to be taken out. Today, intraday, it was taken out, and it's going to continue to go lower. Remember, you got news coming out that's going to move the markets probably, most likely to be on the bear side. It's going to be in favor of bears. You're going to have the unemployment data, the revision of GDP. That's going to press markets lower. Okay, nobody wants to buy ahead of that news. Couple other items to note here about the Dow Jones Industrial Average. Look at that. All right. The only volume you're getting is in favor of bears. All right. Also, bearish crossover. Overall trend is down. Histogram growing stronger here, not weaker. So your downtrend is actually growing in momentum, gaining momentum as it goes. All right. You don't want to be trying to buy there. You're trying to catch that falling knife and you'll get your hand chopped off. You don't want to do that. It's a good way to lose money. Okay, someone asked me to have a look at gold for them. Basically, I couldn't tell you much here other than I would neither be a buyer nor a seller of gold. It's overextended, so you couldn't buy it, and I wouldn't short it because if you wake up tomorrow morning and the euro is toast, gold could spike on speculation and all this other stuff. So yeah, I don't want to play that game. Some guys will do it, but I'm leaving gold alone and I'm leaving oil alone. These are two items that I won't mess with. There's just easier shorts out there and easier longs, okay? So this one is overextended. Obviously, what you've got here is the first move to the upside, the consolidation, the second move. You got a little more room. You could bounce along to the upside, but it's too overextended to be making new money on that, okay? Not going to do it. Okay, here we are looking at the Hang Seng Index. This one is the same as you've seen before, but you got some strength in favor of bears developing here. Note this previous high point here, and now this lower high, 21.8. This is downtrend there. We got the old downtrend line there. All that did was lock in the downtrend. It's not going anywhere, and I expect this low here to be taken out. Why do I already know that? We're still way up here. Because I can look at this low point here, the slow stodge, and this higher low, and go dun da da, dun da da. This is bogus. It's going to break down. This is telling you the truth. You've already seen it make a lower low, so you expect this to do this. Obviously not in a day. Markets don't fall straight down, but from a swing trader's perspective, expect this level to be taken out. Very easy. You will also note every time they bounce up here above that 200-day moving average, it's an easy short. Oh yeah? Yeah, like that. Okay? So why, let me clean that up, would you try to buy right here when you only got this much room to the upside before you get the easy short? You wouldn't. You would go like that. Quick look at the FTSE, the London Financial Times Index, very bearish, still dragging its feet, but these 3 days, this had a selling here, little bounce to the upside here, and then sell off again, bearishly engulfing the previous 2 days. That's a bearish box. Basically, anything above the 50-day moving average is now owned by bears. They control very strong at that level. Also, the same thing we talked about before, this 200-day moving average right there, right there. Every time it hits up above that, you get nailed. So why would you buy right here just to play right here? You wouldn't. You would go lower. There's no resistance at that point. Also, as we've pointed out before, a low point here corresponding with this low point, lower low, much lower low, way down here. Okay, these low points correspond here and here. So you got an uptrend here, a downtrend here. This is fake. It's going to break out, fall below this 5,090 level. Okay, right there. I'm going to take out that. So you're going lower. Of course, you didn't need me to tell you that. You could have just looked at the candlestick and saw that it wasn't a wrong tool. That it was not a hammer formation, and therefore it's not the bottom. Wow, shocker. Okay, quick look here at the S&P 500 now. I mentioned earlier that I was talking about the major markets going to sell off, and people were looking at these oversold conditions of these slow stocks and thinking, no, it's going to be a buy opportunity you want to buy. And I said that was wrong, and actually I'm going to show you again how to spot that. There was obviously several different things that I took into account as to tell me to stay short this market, but one of the things you could have done is, I've said before, whenever you're analyzing your major markets, compare it to the VIX. Double check it against the VIX. Look right here, you can see it's showing oversold. Is it? Let's check it against the VIX. If the if the US markets are oversold, oversold, then the VIX should be overbought. Well, there's multiple ways to spot that. Number one would be, get the tools out, would be to find an inverted hammer. No inverted hammer anywhere around here. No, it never happened. Okay, so it's not by the candlestick formation. Trading at the upper Bollinger Band line in this case doesn't bother us. It would back here because it's an extended, very widened pattern of the Bollinger Band line, but in this particular case it's very tight. We talked about that before. That happens before a breakout. And again, very easy spot here. Never even touched the 80 line, right? So she's not overbought at all. The markets are not oversold, and the VIX is not overbought. Oh, wow, look at that. That's awesome. Also, look at your weekly chart. That inverted hammer that I pointed out on last Friday's video, it shows you at the top of the pattern. We're just getting started. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, refer a friend. Very cool, very easy. Also, please subscribe to that YouTube channel. We need that support to stay free. We appreciate that show of support, and please continue to do that. Quick look at our disclaimer. The disclaimer, read it and weep. Dun, dun, dun. All right, you read, I'll talk. We've got another article posted on our website for you guys that want to read that. Check that out. Also, today we took a new position on our top picks. That's available on our website. You can go check that out. And anybody who registers or pre-registers for next month's trading course gets the rest of this month for free. And that's how you can actually see our top picks and so forth and so on. So that's all pretty cool. Very cool. You can check it out on our website. And I guess that's about all I got to say for you. Yeah, look for the market to keep selling off on that bad news. It's expected to come out. Obviously, I don't know the news for certain. So if you want to advance your stop loss limit to lock in your gains, there's never anything wrong with that, right? That's just smart trading, all right? Awesome. Take care. God bless. Be careful. And I will see you all tomorrow.